let me talk to you guys about why I started doing this. And Ritesh, thanks a lot for supporting. Farooq was here last week. Abhishek Goyal before that. Chetan was there right in the beginning. Good to have people support. So what I found, right, Ritesh, and why I started doing this is, so this is my third startup, right? So I'd say, Deals and You, where I was CEO, it was not really a startup I founded, but I helped scale it, turn it around. So I count that as the first, second, third. One of the things that I noticed, Ritesh, and that's what actually inspired me to do this, is as I kept looking out for how to grow the business, and now we have scaled massively at Interview Kickstart, things are going really well. One of the challenges that I kept seeing, dude, is that I would keep struggling to find insight from Indian founders, Indian VCs, Indian operators. The guys who were really talking were the guys who are much more senior. Like, so Harsh Mariwala, for example, is one of my mentors. I had spoken to Nandan a couple of times. Subrata Bakshi, these are the people who are the ones talking about entrepreneurship. For some reason, early stage stuff, right, like GTM, product market fit, pivots, all of this, dude, we don't seem to have enough of made in India kind of insight and advice. And so that is really why I started this, the Good Time Show. And my hope is through these conversations, we will be able to create the India playbook. And that's kind of what I'm driving towards. Does that make sense? Do you also see that, by the way?
You're the only person in my network, Ryan, who's clamoring for more gyan and not less. So I do have a point of view on that, but we can come to it.
No, so while we're saying that, so there is a lot of gyan out there, right? A lot of the gyan seems to be Bay Area kind of focused playbooks. And maybe because I'm not in the we haven't raised any money and we've grown through customers funding us. Maybe that's why I'm not seeing this. But do you think that there's enough of like good India focused, India product market fit, India pivots, India insight that's coming out to the mass public, not necessarily to only the few folks who are getting funded by VCs?
Actually, more seriously, Ryan, you're absolutely right that the content is very US focused. What I would like to see more is actually more practical knowledge being shared by founders themselves. I actually wish there were that we VCs would speak a little less and listen a little bit more. But for the founders, and not only the founders who have been phenomenally successful, who have built the unicorns, but the founders who are still in the trenches in their seed rounds and Series A rounds, if they start sharing a little bit more practical knowledge, how to design a phenomenal onboarding experience for a consumer app, how to get your first $1 million ARR as a SaaS company from India. That context is completely different.
Yeah, exactly.
How you onboard an Indian consumer is very different from how you onboard an iPhone consumer in the US. How you build that first $1 million ARR in India when you have call center agents who are basically barely technically literate. It's very different from doing it when your company is based in the Valley. So I wish there were more of that kind of content and that kind of sharing. Us VC sharing, maybe not so much.
So that's absolutely the hope. You're absolutely right. In fact, the discussion that we did with Anirudh and Faizan touched on this, right? It was pretty much this. They were in the trenches, how they exited, stuff like that. Anyway, champ, I'm going to start, right? We have a whole bunch of people here and it's 7:35. Okay. So let's get started with today's session and we'll have people coming in as we go. Are you good to go? You got your drink? Are you well set up? Whatever your drink is, you all set up?
All set up, Ryan.
All set up. Okay, awesome. Folks, I want to welcome all of you to the Good Time Show. My name is Ryan. I host this once a week. I'm still experimenting on what time and where to do it, but I do it in the Good Times Club, which is a club that I've set up. We try to do it on Wednesday evenings, usually at 7:30. And like I was telling Ritesh, the reason I want to do this is, I'm very passionate about early stage, helping companies scale up. I'm a founder myself. And when I was scaling, 0 to 1, 1 to 10. We are probably on the 10 to 100 right now, but 0 to 1. Hey, Abhishek, welcome to the room. the challenge I found was that I was not getting practical advice that I could find out there. And I spoke to a bunch of folks. Abhishek is in the room right now. Abhishek's the founder of Traction. We had a chat a couple of weeks ago. I spoke to Farooq, founder of Find, and we all had essentially the same thing. How the hell, like Ritesh said, do you get very practical advice? And that's the endeavor, right? There are a bunch of young founders here. Shrishti is in the room as well. Shrishti started to do something very interesting. So hopefully this is interesting, guys. If you want to hear about the other rooms that we do, and when we do them, just please follow the club and follow me, because I'm still trying to figure out which club to do this in, whether we do this on our own or whether we do it in another club. But follow me, follow Ritesh. Ritesh is a bit of a newbie on Clubhouse. Show him some love, show the club some love, and let's get started now. Today we have Ritesh on the show. I assume most of you already know Ritesh. Ritesh is a very well-known guy in the Indian startup space. He founded Stellaris, right, along with Alok and Rahul. And I'm sure most of you know Stellaris, but quick one-liner. Stellaris is, in my view, probably the leader, or at least amongst the leaders, of the new age, second generation VC firms coming out of India. Much younger folks, after the Accels, the Sequoias, and many of the older guys. They've done a phenomenal job. They're on road to the second fund. Amazing company, done a lot of incredible stuff. We're going to talk to Ritesh to learn a lot more along the way. But Ritesh, I want to welcome you. Thank you so much for the time. And should we get the good times rolling?
Absolutely. Thank you so much, Ryan. Thank you for having me on the show. I look forward to talking about our story and also taking a lot of questions from the audience.
Awesome. I hope you look back at the show and still look forward to it. let's get going. Let's get going, champ. So I did send you a bunch of questions, but consciously did not send you a couple of questions, right? And so given your love for cricket, and I'm going to start with the rapid fire, given your love for cricket and mine, and we are constantly interacting on Twitter, exchanging questions and notes. Let's start with what I consider possibly the most important question facing India today. And that is, who's the better batsman, Virat Kohli or Rohit Sharma?
I guess the answer to that is very simple. Yeah, Rishabh Pant.
Rishabh Pant, oh my God. You seem to have a fascination for the southpaws. Okay, that's a good answer. Next gen. More serious question, dude, in the rapid fire. What keeps you up at night today?
What keeps me up at night, whether we'll have another lockdown or not. It's the number one question that I worry about every day.
Okay, and last question, rapid fire, just so everybody gets to know you a bit before we jump in. How do you learn?
You mean apart from Twitter?
Apart from Twitter, yes. As a VC, you got to learn non-stop, right? And you're always in environments where there are new companies, new things, new trends. In my view, apart from learning how to deploy money, I think maybe learning really fast is possibly amongst the core skills that any good VC has. So what is your unique learning style, and where do you go and how do you learn?
Actually, Ryan, if you'll allow me to be serious for a minute.
Yeah, please.
I think our learning styles also evolve with time, as much as our personalities do. So I used to be someone who learned a lot by reading, by reflecting, by trying things out, by myself, locking myself in a room. Over time, I think my personality has changed, and I learn a lot more now by speaking with people. I also find that to be a very efficient way, at least, of developing a quick understanding of something new. And VC puts you in a phenomenal position to be able to do that. Because in which other profession do you get paid for people to come and teach you about the things that they are experts at? So over the past, I would say, decade, my learning style has changed quite a lot. And now I learn best by listening to people.
Interesting. So I agree with you, by the way. I think there are only three ways to learn. One is reading, like you said. The other is reflecting, and the third is talking to people. And that happens to be my learning style as well, talking to people. So awesome, Ritesh. That was just a warm up, just for us to get to know you a bit. Now let's dive into what we are here for. Right. So you guys did something quite stunning. right? When you set out, Rahul, Alok, when you guys set out to start Stellaris, and I remember we had spoken around that time. I had reached out to you to pick your brain on some stuff. I was quite amazed with the level of ambition that you guys had, right? And if memory serves me right, your fund, now I know you're on the road to fund 2, but fund 1, you guys raised somewhere between like 90 to 100 million. That's obscene. I mean, that's actually ridiculous for fund 1, right? Coming off the blocks, first fund, people are struggling to raise 10, 20. You guys ended up raising 90 to 100, right? Which was insane. Now I know you're on road to fund 2, probably raising 150 plus, if the news is to be believed. But the question I have to you is, what kind of inspired you, right? Or what did you think of? What was the spark that got the three of you together to say, hey, we need to do this? And was there any particular gap that you saw in the ecosystem that you felt we could plug that gap? So what's the founding story? If you can just tell me the brief highlights, what are the punchlines, what are the key things, talk about how you assess the market, and just go back to maybe 2016, 17 when you guys were thinking about this.
Sure. Good question, Ryan. Ryan, my partners, Rahul, Alok, and myself, we were all partners at Helion Ventures.
Right, I know.
And we had been together for a very long time at that point in early 2016. Rahul and I had been working together for 6 years at that point, and with Alok, we had been together for 4 years. And let's just say we didn't dislike one another. We were at that stage in our careers where we had built enough experience and enough networks in the startup space.
Sorry, just out of curiosity, Ritesh, how long had you guys worked together by then?
So we had worked together as VCs for 6 years at that point.
I see. And, so long relationship.
Yes, and we had worked as VCs, Rahul and I, for almost a decade. We have been in the VC industry since 2007. So we were really at that point in our lives and careers where, on the one hand, we had built enough experience and enough networks in the startup space, and yet had enough energy to launch and grow a new platform. So really, the question we asked ourselves was, if not now, then when? We were.
I see.
We were all our ages were clustered around 40 at the time, between, I would say, 38 and 43 years old, and it was the perfect time. That mix between youth and experience, we found ourselves in a sweet spot.
Got it.
And then, of course, where the market was at that point played a massive part in us starting up. And by 2015, 16, we had seen 2 cycles of venture capital play out in India, and we thought we were at the beginning of a 3rd cycle, and that is what we wanted to in a way bet our careers on.
So just before we go deeper, Ritesh, quick question, champ, on this. So yeah, I remember cycle 1 and cycle 2. I was playing on the other side, right, as a CEO of a startup at that point of time, and then second stint was at Axel. Ritesh, can you hear me? I think you might have. You can. Okay, great. So so I remember those 2 stints. Now, when you were starting out, what made you believe that we were at the start of the 3rd wave of this ecosystem? What are some of the data points? What are some of the events that gave you that conviction that yes, we are on to the next wave?
Ryan, I would urge you not to say the words 3rd wave in public in Bangalore. Someone will come and give you a term sheet.
Yeah. Okay. Fair enough.
But like I mentioned, before I come to the 3rd wave, so to say, I do want to touch upon the first couple of waves.
Go for it.
As I mentioned, I started in venture capital in 2007, and the first phase I would call the waiting for Godot phase of venture capital in India, and that probably lasted from 2007 through 2011. Because there was not enough online penetration in the Indian market. We had all of 20 million internet users, and I remember that we used to ask every company that used to come to us with an online business, we used to ask them, what is your offline strategy? Because there was not enough. There was not enough of a business to be made online, and I don't know how many businesses we have killed by forcing them to have an offline strategy, because how large a company can you make when the entire country has 20 million internet users?
Right.
The other, I would say, characteristic of that phase was that the founders were all your ex-IBM kind of founders.
Interesting.
So they were not. They hadn't exactly learned how to move fast and break things. It was more about hiring an assistant before hiring your first engineer. The culture of Indian startups at that point was also slightly different. And I would say the third characteristic of that phase that sticks to mind is that there was no follow-on capital available. So whenever we made an investment, I mean, it sounds ridiculous today, but when we made an investment, we had to make reserve allocations all the way till the exit.
No, it doesn't.
Nobody else would come after you and say, okay, I will, you have invested in seed and Series A, now I'll take over.
So Ritesh, this is not ridiculous at all. In fact, Abhishek, who is here in the audience, and I'm going to ask him to come up later on and ask questions. Abhishek said something hilarious last time around, where so he spotted Flipkart, right, as the first. He was the guy who really pushed Flipkart, and Abhishek and I were co-CEOs at the same time, and that's how we kind of know each other. Abhishek, when I was talking to him, he said something really interesting. In fact, when they were thinking about investing at Flipkart, the question that was being asked. The question that was being asked is, "Oh my God, Flipkart is going to require 20 million to scale, and where is this 20 million going to come from?" Now that sounds so daft, right? Flipkart probably raised $1 billion, exited at close to $20 billion. But I can well imagine, right, at that point of time, everybody was wondering about this, and we seem to have gone the whole circle now, because now we are online guys thriving, starting offline. There is multi-channel retail, O2O, all bunch of interesting stuff. But yeah, I completely agree. And so that was phase one. What about phase two, and then now phase three?
Yeah. So the companies that actually succeeded in phase one, just to wrap that up, were either non-tech companies or what I would call technology services companies, as opposed to online businesses or product businesses. Then around 2011 is when the market, to me, started inflecting in India, and that second phase I would call the era of the smartphone. That lasted from 2011 through 2016, and that is where the largest unicorns of today actually got created, or at least grew. So whether it is Flipkart or Myntra or Ola or Paytm or Policybazaar or Zomato, these companies actually came into their own in the second phase, where the driver was actually a transition from offline to online in existing large markets. So Flipkart and Myntra did it in retail. Paytm, if you remember, under that brand,
197,
the Paytm brand, they started as a mobile recharge company.
Correct.
They had the insight that it was a pure digital transaction that can easily be done online.
And they came from that 197 heritage, and then built Paytm on top of that. Yeah,
absolutely. So the transition was really offline to online. I think that the other big transition was that was also the time when the profile of the entrepreneurs changed, both in terms of the actual generational change. That is where millennial founders started to found their own companies, and also, more importantly, this group of founders were digitally native.
Correct. I remember.
That meant that their understanding of, if not internet business models, at least the internet consumer was very, very strong.
I see.
A third, I would say, characteristic to me in that early phase of internet business models in India was that this was the age of copycat models, where you look at what has worked in the US and especially in China, and you in a way transplant that into India, and you could potentially create large businesses because these were the low-hanging fruits. why reinvent the wheel? You back the right founder in a large space, and with the momentum of all the smartphone users that were coming online, these founders were able to figure out the right experiences and value propositions. And that phase to us, it was towards the end of that phase that we decided to start Stellaris. And Rahul and I, our consumer guys, Alok is a more B2B and SaaS, has a B2B and SaaS background. So when we were out fundraising for Stellaris, we had pretty much nothing to do. I mean, how much time can you spend in fundraising?
Yeah.
So Rahul and I decided that we will find out, when you're actively running a VC fund and managing a portfolio, you actually don't get time to do open-ended research, or not as much as we would like to.
Right.
At that time, we were relatively free. And so on a whim, we decided that we'll go and talk to new internet users. So between us, we spoke to about 200 consumers in early 2016.
Very interesting.
And
this was all in, and what, sorry, I'm interrupting you. Was this largely done in the top cities, or did you even talk to people in smaller towns? Because one of the things I realize is that the usage is actually quite different in big cities and smaller towns.
So again, I'll disagree a little bit, Ryan. I actually think that the axis of differentiation in India is actually not geography as much. I mean, I used to say earlier that inside every large city, inside every metro, there is a small town, and inside every small town, there is a metro in India. But I mean, I know that you're speaking as of geography as a proxy for the customer segment.
Yes.
But I have rarely found deep insights along geographical lines. It has been a lot more around either cultural or economic lines, where there have been multiple segments, and these segments also merge with the other. So I'm not actually that fond of labels like India 1 and India 2 or Bharat market and so on. And we can always talk more about that. But whatever you call these new internet users at that time, I'm just hesitant to use the word Bharat. Our eyes lit up talking to these guys. I mean, there was an entirely new segment of consumers coming online whose experience with the internet was totally different from yours and mine at that point. I'll tell you one story that made Rahul and I really, we were sitting across the room and this guy was sitting in the middle between us. So this was we asked what apps do you use, all the regular researcher kind of stuff. And the one app that was missing, or the one service that was missing, was Google. And so this person, he was about 25 years old, middle class guy. So he said that he discovers products by scrolling through apps. And
by scrolling through apps.
In the sense that you will, it's a browse paradigm that you literally try to browse through what you need as opposed to search for it. So we asked him, why don't you use Google for this? Right? It was a natural question to us. Yeah. And he said, Google use करने के लिए तो cyber cafe जाना पड़ेगा ना?
That's hilarious.
And that made our minds boggle at that point. That in his mind, the desktop internet was a completely different product than the mobile internet.
Very interesting.
And what we took for granted, that you could use Google on your mobile phone. This guy, it did not occur to him that he could use Google on his mobile phone. I'll give you one more example from a different user that we spoke to. So we got carried away a little bit. So we would observe, the usage of apps, and we fancied ourselves UX researchers for those 15 days. So we saw that this guy, everything that was on the front page of the app was getting used. Everything that was hidden behind the scroll was not getting used. So we asked him, do you know what this hamburger icon does? The three,
the three lines
that we see on most apps.
Right.
And he had no clue. And even when we told him that you can use it, you can click on it to do other stuff, we, he could not actually make sense of a menu. What does a menu do? And the point here is not to say that this user was in any way an inferior user to the people who had transitioned from the desktop internet. The point is that some of the things we take for granted, or we took for granted as we moved from the desktop internet to the mobile internet. Menus, for example. We have been using, I have personally been using menus on computers since I was in school. So it had become second nature that you click on a button and a set of options show up, and then you select those options and some more options show up, and so on. That paradigm did not exist with the new internet users. Similarly, the concept of searching through a catalog did not exist. So we became really excited, and some of those things are played out and some haven't. But at the broadest level, we realized that a completely new set of services will need to be built for this user base that had just come online. And those services were likely to be far more India-specific than what had happened between 2011 and 2016. So that was now in hindsight, that doesn't sound like any great insight, right?
So was that the real light bulb moment where you guys said, okay, there is this massive new audience that's coming on board, completely new kind of products likely to get built, India first, possibly, rather than copycat models. And the same trend actually played out in China in just a few years ahead. Was that really the spark that made you guys say, yes, this is a new audience, new bunch of users, there are going to be phenomenal companies being built in this wave? Is that really what let's say sparked this whole thing?
Yeah, that was indeed an aha moment for us. And in addition to that, we actually had a lot of fun.
Awesome.
We were on the road, and the aha moment was that everything will change when this audience, which we now call the geo audience, comes online. And everything did change. Some things we got wrong, but a few things we did get right for this audience.
Awesome.
There were another couple of drivers at that point.
I'm going to just interrupt you if you don't mind, right? Because I want to come back to some of this later, right? I just, in the interest of time, there are a bunch of different things that I want to cover, given the unique insight that you have, right? So if you don't mind, I'm going to just move on a bit. And can we come back to this?
Of course, right.
Okay, awesome. No, so this is phenomenal insight, right? In terms of how India is changing, geo audience. Last week we had Farooq who built and exited fine to geo, and Farooq's going to come back later and talk about the kind of insane stuff that's happening at geo, the kind of insane scale that you're seeing there, the kind of crazily new audience that you're seeing. But so let's come back to all of that. Now, just to going back, Ritesh, I'm curious. In many ways, although you're a VC, you're a founder, right? You're a let's say a founder VC, right? So you're a founding partner of Stellaris. Just to pick your brain, right? Is there fundamentally a difference in mindset that you need to have as a founder VC versus, let's say, a regular founder? And if so, what are some of the maybe top 3-4 differences that you as a founder VC need to have in mindset versus a regular founder?
Very interesting question, Ryan. I think so. I'll start with what I consider the biggest difference between starting a VC firm and starting a company. I think the personality that you need to start a VC firm, or in general to even become a VC, has to be very different. I don't tire of telling my friends, and particularly some younger friends, that if you have an alpha personality, it is probably better to start a company than to start a VC firm or become a VC.
That is very interesting. I don't think I've ever heard somebody say that, but I can completely relate to what you're saying. When I look at most of the successful VCs, at least that I know, they don't have very alpha kind of personalities.
Thank you so much for that compliment, Ryan.
Yes, it was meant to be.
But I totally believe in that, because there are, the VC will never be the hero of the movie. The VC will always, at best,
Right.
be that trusted sidekick. And trusted is a very loaded word in this.
So you mean
context.
you're the Robin to most of your founders' Batman?
Oh, absolutely.
Okay,
At
okay.
best, the Robin,
Okay.
if not the Joker in some cases. But but I do think that uh, you need to have a very clear idea of what you want. If you if your sort of deepest desires are to get fame and recognition and adulation, I actually think that VC is not for you. If you have a high need for control, VC is likely not for you, because VCs hardly control anything. In fact,
Interesting.
one of the most senior VCs in when I joined the VC industry told me that, imagine you are a passenger in a bus, and someone else is driving the bus, and you can see that the bus is headed towards the wall. You can't do anything. You can't even take control. You just hope to God that just before you hit the wall, an extended runway appears, and the wall becomes, is another 18 months away. So that is actually exactly how the experience of being a VC has been. That
Interesting.
someone else is in control. At best, you can whisper a few things in their ear. They may or may not listen, and they're driving into a wall at full speed.
So just to interrupt you there, Ritesh. So just to make your life difficult, right? And ask you a challenging question in this context, and maybe it's exception to the norm. But one of the things, for example, and I'm going to come to this later, is in India, we have not really seen the stage of solid founders like a Sachin or a Bini or other folks who have exited, who've then gone on to become VCs. But in the US, and to some extent in China, I would say much more in the US, right? There are some seriously capable founder VCs. And I'm just thinking the stuff that comes to my mind. Reid Hoffman, right? Exit at LinkedIn, now at Greylock. Mark Andreessen, Ben Horowitz, right? So do you feel that, obviously there are the exceptions, and that is just because this is the exception to the rule playing out? Or do you think that in an Indian context, we are not yet there and we will see that play out over time?
So I hope it plays out, Ryan. I have been actually hoping and expecting, several of the successful founders in the past 5 years to take up VC roles, but I guess it's not an interesting enough industry for them. So they've been
It's not yet happened, yeah.
But very much like founders, I actually don't think there is a template for a good VC. I can tell you what what doesn't make a good VC. Like I mentioned, the need for control, the need for fame and recognition doesn't make for a good VC. But I wouldn't be able to tell you what does make a good VC. I mean, look at like Mike Moritz of Sequoia. He was a journalist, right? He was a journalist and an author. So I actually believe that while founders, have often proved to be good VCs, I don't necessarily believe that you need to have been a founder to be a good VC.
Okay, that's very interesting. Ritesh, just quick thing, champ. So when you're talking, I think your mic is getting stuffed behind your collar or something like that from time to time. So at some points of time, it's coming a bit muffled. Otherwise, the sound quality is pretty good. So if you could just be a bit careful and keep your mic. I think Clubhouse is not yet. Clubhouse itself is a newbie, and so they haven't quite figured out this whole volume thing. Okay, so I think that's a very good, interesting segue into something else now. Now, I'm going to give you 3 words that every freaking VC asks or has come up with when they're talking to founders, and I'm going to turn the tables now. And I'm going to ask you about what they mean in your context. Are you ready?
Okay.
Okay. So the 3 words, and I purposely didn't send you these questions, are GTM, which is go to market, PMF, product market fit, and pivot. Now I want to put you in a tough spot and ask you about how these play out in a VC, right? So let's go step by step. For a VC, Ritesh, is there anything like PMF for a VC? Do you guys ever think of product market fit from a VC perspective? And if so, how is that different? What does that mean? What does that look like?
Very, very interesting question, Ryan, and something that we think about all the time.
Okay.
So
Okay.
for
Great.
us, it is not necessarily product market fit because our product is actually a commodity. Capital
Exactly.
is a commodity.
That's the reason I was asking this.
So it's not necessarily product market fit. It is, if I were to coin a term, I would call it a brand market fit. Are we offering to the is our brand offering?
Voice is a bit muffled, Ritesh. Something's going on with your voice, a bit muffled.
I have no idea.
Okay, no worries. Just go ahead.
I'll keep going. So, is our offering in the market in line with what the market wants? The best measure of product market fit is that in the right. Let's say we believe we are, we want to create a seed VC brand or a seed VC firm. If you ask the average, entrepreneur who's trying to raise seed money, would we be in the first 5 VC funds that they go to in that consideration set? That is how we measure our brand market fit. I'm not sure we are there yet, but that is where we would want to be. That when our target market, when our target entrepreneur wants to raise money, are we in his first list of VCs to get to? Right? That is what
I see.
Brand market fit means to us.
So let's tee off from there, right? And let's go to the second very popular acronym, right? Which is GTM. So if your goal is we need to build a brand such that we are in the top 5 consideration set whenever a entrepreneur of your, which you guys like comes to you, how do you go to market as a VC? Because like you said, the offering is a commodity, right? Your rupee or dollar is as good as Shubrata's from Excel, right? In terms of just the dollar or the rupee or the Gandhi, right? So how do you guys think about GTM and differentiation in a VC context, given that you are like cement, right? It's a commoditized offering.
So it's once again, Ryan, it's a difficult question to answer, not a straightforward one.
That is the reason I'm asking the question.
No, absolutely. So, there are a few metrics that we measure obsessively to measure our GTM, so to say. Every quarter, we measure what percentage of the deals done in the market in the past quarter did we get to see.
Interesting.
And that is born out of a fundamental truth that not many people outside the VC industry pay attention to, which is that VC is a network effects business.
Right.
The reason there are so few VC firms, the reason it is hard to start a new VC firm is because, very much like a Facebook or a Twitter, VC is a network effects business. If your venture fund has been successful and you have funded some great companies before, the next set of good entrepreneurs come to you because you are the guys. You were speaking about Subrato. Subrato is the guy who funded Flipkart.
Yes.
I am the next Flipkart founder. I'm going to go to Subrato first.
So in fact,
that has a knock-on effect on your ability to raise money. So the best investors also. Sorry, I'll just finish. The best investors also flock to you because you have delivered a great outcome, which means that you get to raise a larger fund, which again attracts the next set of great entrepreneurs because now not only are you the successful VC, you are also the VC with the largest checkbook. And so success builds upon itself. And this is why it is very hard to start a new VC firm. Just like you would not start a new social network today. Well, we are on a new social network, but
it's tough.
Those network effects are very, very strong in VC firms.
I see.
And that is why I might be the smartest potential VC on the planet. I might be able to recognize the next Flipkart when I see one. But if that founder won't come to me, I will not have the opportunity to invest in it. So my smarts are worth nothing if I don't have access. So the most important thing that we measure is how much access we have.
Okay.
And the first metric for that is whether we saw what percentage of the deals that got done in the market actually came to us. Now, when we started Stellaris had no brand. We had some individual networks and some individual names, but we did not have a firm name at all. So at that point, this percentage for us was like 55%. We only saw about 55% of the deals that were getting done in the market in 2017. Today, that number is upwards of 80%. So that is a metric that we are actually very proud of having moved in the past 4 years, because now at least 80% of the entrepreneurs that end up getting funding from someone at least came to us. We still can't say whether they came to us first or they came to us last, but at least they talked to us before they raised money.
Awesome.
I'll add one more metric before I wrap up the GTM part.
Please.
Now, after you know that people are coming to you, you want to figure out whether those people are coming to you first or not, or at least amongst the first few VCs that they go to.
Interesting.
So the way we try to measure that is by looking at deals that came through proprietary networks, which is that people that we are directly close to, who so we have a network of successful founders that we call the Stellaris Founder Network, and beyond that a network of people who who are successful in the ecosystem, who are influential in the ecosystem. So we measure what percentage of the deals that we see are coming through that network, because chances are that those people would have preferentially passed on those deals to us, versus if someone has written a cold email to us, or if we have written a cold email to somebody else, the assumption is that that entrepreneur has spoken to every VC in the country. So these are the two metrics that we measure every quarter in order to figure out our GTM.
Awesome. I think that's a fabulous answer, Ritesh. Thank you so much for sharing that. Amazing to see that you guys not only are looking at GTM, but you have data points to metrics. Just a couple of things that I would want to add here, Ritesh. So I count myself as being incredibly privileged to have two of India's most successful VCs as very close, like friends, and much more, I'd say, mentors. One is Shubrata, who I work with very closely at Axel for 5 years. And through Shubrata, Ashish Gupta, right, who you have also worked with. Two incredibly smart, incredibly generous guys, and I've learned so much from them. One of the things that, I'm going to, one from each. One of the things that Shubrata mentioned to me, Ritesh, in line with what you have said, is very early, Shubrata told me, we were out playing tennis actually, and we were taking a break during the tennis match, and he said, I was talking to him about VC, similar question. And his view is that actually VC is a repeat game. He says, very often you actually have to back founders. You see something in them, they may not hit it at the home run first time around, but they come back much smarter the second time around, or they might have hit a home run next time, it's an even bigger home run. And so that was one very interesting lesson I learned from him. The other thing, and to your point, that I want to double down on your point, where you talked about the importance of the network and the importance of seeing deals, Ritesh, and I'm sure you guys have realized this, is VC is the ultimate power law business, right? So you really need to see as many deals as you can, I'm sure, and find the best ones, because the best ones like a Flipkart or a Paytm or any of these Byju's, their returns are just insane. And so if you are not seeing deals across the board, then this power law really doesn't kick in for you. Does that make sense?
Yeah, absolutely, Ryan. In our industry, we say that any number of type 1 errors are okay, but type 2 errors are not in our plans, which is
very interesting.
I would much rather.
Are you guys engineers?
I mean, who isn't in India?
I'm not. Although I run a company for engineers, but I'm not. But yeah, exception to the norm, maybe.
Yeah,
okay.
So errors of inclusion are okay in our business. that errors of exclusion are not acceptable. So every day, I'd read that did I today reject a company that will become a $5 billion exit.
Interesting.
So that's my bigger fear than, hey, did I invest in a dog? That is a little bit less of a concern.
Makes sense. Okay, Ritesh, if you will allow me, I want to just quickly reset the room. We have a lot of folks here, guys. We also want to take questions. So anybody is thinking of asking questions along the way, please raise your hands. I think hand raising should be open to everybody. So just raise your hands, and I'll keep pulling you guys up at the appropriate time. Ideally, if you raise your hand, at the appropriate time, we're speaking about a topic you want to ask a question on, that would be helpful. But quick reset, right? So thank you all of you for being here. I run this show called The Good Times Show, and it's inspired by the fact that we are really running through some amazing times in India. India shining, made in India, all of that. Digital India, I would say, is really the thing to be very, very inspired by. We have an opportunity to lead the world in many areas, and so my goal is to do this once a week, usually Wednesday evening at 7:30 p.m. If you like what you're hearing, please follow Ritesh. Follow me, follow the club. You'll hear we have a bunch of very interesting folks lined up over the next couple of weeks. Today we are talking to Ritesh, who's a founder VC, the founding partner, one of the 3 co-founders at Stellaris Ventures. We've already covered a lot of ground. How they started, why they started, what are the waves of internet in India. The fact that we are seeing a wave where India is now at a place where it's no longer copycat models, many very unique models coming out of India. We've talked about Stellaris' journey so far, the difference in mindset between a founder who's founding a VC and a founder who's starting a company. We talked about PMF, GTM. Let's skip pivots for now. And we'll take questions in a little while. So that's a quick room reset, guys. Anybody wants to ask questions, please raise your hand. Happy to take them along the way. Now, Ritesh, in the interest of time, dude, I'm going to actually move on to ask you an interesting question, right? So there's a lot of money coming into India, right? One can argue to some extent with the interest rate regime that is very low, close to zero, negative for a short time in many parts of the world. Our own interest rates are moving down. All this havoc that's being brought about by COVID. There's a lot of money which obviously flocks to high yield assets like VC, but that is across the board, right? If I look at the kind of money, so question is this: when you guys are, and now you're raising a second fund, so maybe a very pertinent question, what kind of capital is really available for Indian funds, right? How do these folks think about India? What is the thesis in their allocation? Is there a different kind of money that's available for Indian funds? And if you could just talk about the color, the shape, the size, the form of capital, and a sub part to that is why are so sorry,
I could not hear the sub part. You said
sorry, I'm getting
I could not hear.
Sorry, I was getting an incoming call. I was saying that the color of money and the money that's coming into India, right? Why are folks investing in India? What are they looking for? And why are the folks who are not investing, right? So just to understand the whole LP thought process around investing in Indian VCs.
Interesting. I mean, I rarely get asked about fundraising for VCs. Most of the questions are that entrepreneurs care about are actually fundraising for startups. I think, first of all, fundraising for a VC firm is completely different from fundraising for a startup.
Okay.
And the dynamic is different because in a startup, it is you need one hit. So you go to 20 people to raise money. One of them needs to say yes. In a VC firm,
Okay.
when you're raising, you need 20 different people to say yes all at the same time. So the reason
Very
the
interesting.
way this is different is that it's again a little bit of a network effects game that everybody will say yes when everybody else says yes, and so it's a little bit like herding cats, and that too at the same time. So it's a completely different process. You don't actually go raise a fund at a given point in time. You're actually raising your fund far in advance of when you actually need to raise a fund. So you form relationships over years to be able to ask for capital when you're raising the fund, and then you need to be able to close fast. And that traditionally has been a challenge in Indian VCs that are raising. I'm not talking of um, Indian firms of large US VCs or successful VCs outside of India. I'm talking of sort of born and bred Indian firms. The challenge is that the people, you need someone to put a stake in the ground and say, I will be the first to commit, and I will commit a large amount no matter if anyone else comes or not. So for someone to break that cycle of, I will invest if everybody else invests, right? And that variety of investors into Indian firms are very, very few. I can probably count them on the fingers of two hands. The total number of investors that are both interested in India and will be the first and the largest check to come into an Indian VC firm.
Okay.
And the reasons for that, why that number is small, and why that getting that first and largest check is hard, is because global LPs have been burnt in India before. We spoke about the two phases of the venture industry in India. I would say at least the first phase, did not deliver enough returns at all. And the second phase of startups are in a way maturing now. We hear every other day about all the startup IPOs that are lined up, whether it is Zomato or Policy Bazaar or Delivery, even possibly Flipkart. This industry has been in India for 16, 17 years, and it has not yet lived up to its potential in terms of hard cash returns. There have been literally 2 exits, maybe 3 that have been more than $1 billion. Flipkart, Oyo, and Byju's, right? And that's not enough to show for in a 17-year time frame. So that has been the reason why a number of VCs who have seen the promise but not the delivery, a number of LPs who have seen the promise but not the delivery, have shied away from taking large positions in Indian VC firms. That said, I do think that the tide is turning. I mean, 4 or 5 years ago, when we were raising our first fund, we would get asked a lot more questions about Flipkart than about our own portfolio companies.
Interesting.
And that is because Flipkart was the test case at that point. That will they have an exit? Will they have a good exit? Will they die? 2 years ago, we were not raising the fund, but when we used to meet global LPs, they used to ask us about Oyo. What will happen to Oyo? Is the valuation real? And I mean, we had to politely remind them that can we please talk about our own portfolio rather than firms that we are not actually shareholders in. So that has been historically challenging. That said, I think if you look at even just the past 12 to 15 months, there have been tech IPOs in this time frame. There was IndiaMart, there was most recently Nazara. There is a host of IPOs lined up. I do believe, and in the past few years, there's also been Bharat Matrimony. There is, of course, the 2 or 3 big bang IPOs that are lined up of venture-funded tech companies. Definitely, there is more capital available today than there was even 5 years ago. But it is you still have to answer hard questions because there have been very few large $1 billion plus cash exits in India.
Very interesting. So now, in terms of since you've talked about some of the global trends versus what's happening in India, I'm going to shift gears because I have a couple of other quick sections, and then let's really throw this open to questions. In terms of when you were talking just now, Ritesh, you talked about Indian VCs having poor returns over the years, couple of really big bang exits. Some funds obviously have done very well. You mentioned Byju's, Oyo, Flipkart. And just so you know, guys, he's talking about the exits for VCs in here. Byju's and Oyo have obviously not gone public as yet. So do you see any fundamental difference, Ritesh, between the global VCs, let's say the US and the Chinese VCs, versus the Indian VCs, right? In terms of ability to take risk, funding newer models. Do you see any differences at all between the overseas VCs and the Indian VCs, or is it just a matter of the fact that this ecosystem is newer and so some of these companies will become phenomenally big and you don't really see mindset difference or capability difference or any other differences that you might have the privilege of seeing that we might not realize between India and global VCs?
So first of all, you've said something a little triggering to me, Ryan. So I will react to that.
Good.
Which is that there is this narrative that has been around for at least a decade, that and maybe more, that Indian VCs don't take enough risk.
Right.
And
Yes.
I don't know how that narrative formed, because which other class of investors in any country has poured billions of dollars over a decade and a half and not seen returns and still be accused of not taking enough risk. So if anything, I would say that we are foolish risk takers, because there have been few exits and yet we continue to pour billions of dollars every year into the Indian market. That is born out of a belief that the next 10 years are going to be different from the last 10 years, and that I would say is the ultimate measure of risk. I do feel quite strongly about this fact that Indian VCs are actually high risk takers, as opposed to risk averse people.
So I have a slightly different view here, Ritesh, and we won't get into this because I want you to hear. I want to hear your points on the other differences. So you're right. In many ways, folks have put in a lot of money. I think where this theme arises from is the fact that the money has been put in to models that are global copycat models in many ways, right? And I think the narrative where this narrative comes up is this belief that when you go to raise money, the first question that is asked is, where else in this world have you seen a company like this that has scaled? Show me that proof point. I mean, the narrative goes that India is not yet at a position where they could have a Clubhouse could have come out of India or a Twitter could have come out of India. Now, maybe that's changing a bit because you have a coup. It's still very, very early days. You have a shared chat. You have some of these others. So I don't have a view one way or the other. My point is that is how the narrative has gotten formed, that there is a lot of money being put in, but it's been put in fundamentally in models that have worked in other parts and not necessarily India first models. And that is changing for sure right now. So let's not debate that, but I just wanted to give the other side to the audience. What are the other differences that you feel? So obviously risk-taking, you feel that no, there is no risk-taking difference. Do you see any differences between global and Indian VCs?
Yes, I do, Ryan, but I would again like to react to what you said.
Okay, go for it.
I think this global copycat phenomenon was true for the first half of the previous decade.
Okay.
I would say from till around from the companies that got created between or before 2015-16 were indeed often global, imitations of globally successful models.
Okay.
If you look at the companies that have scaled since then, whether it is a Byju's, whether it is an Academy,
or Oyo, yeah,
whether it is an Oyo, whether it is a Khata Book, whether it is a Bharat Pay, none of these companies actually have parallels anywhere else in the world. So I do think that it is a natural evolution of a market that the initial set of companies that get created will be those that are inspired by what has worked outside. As the market matures, as you discover what makes Indian consumers unique and Indian businesses unique, I think that is when Indian companies or pure India-focused business models get created. And if I look back at the past 5 years, I would say that the most successful companies are those that don't have parallels anywhere else in the world. So that said, let me try to answer the question that you did ask, which was the difference between Indian and global VCs. And particularly, I'll answer this in the context of US VCs because I don't really understand the VC industry in China as much.
Okay, sure, fair enough.
So I think first of all, the global VCs and US VCs in particular are playing in a much, much larger market. And what that means is that it gives them the ability to be very successful while still being relatively very small. So it's the small fish in the big pond phenomenon versus an Indian VC plays in a relatively small market. So at least in the past decade, the path to success has been to grow big very fast. If you look at all the top VC firms that we all admire, they have grown big really fast, and that
Right.
is it's not coincidence. It is dictated by the size of the market. That if the market is small, you need to become dominant by becoming the largest player very quickly. So there is no niche strategy in Indian VC today.
Okay, very
The
interesting.
second difference I would say is that there are lots of templates available. We were discussing an India playbook earlier. That playbook is not available in India.
And you're talking about the India VC playbook. Is that what you're talking about?
Yes, I'm talking of the VC playbook, not the founder playbook.
I mean, the founder playbook is also not totally available. Yeah, but you're right. Okay, so VC playbook. Go ahead.
So in a way, we are discovering templates. We are discovering whether very early stage investing works in India or not, and for a certain size of VC firm. We are discovering how long to follow on in our portfolio companies that gives them the best chance of success and yet gives you the best returns. We are discovering how long do we need to hold a company for before we start thinking of an exit. So all of these are being discovered as we speak, whereas more templates exist. I mean, in India, for example, I'll give you a very small example.
Sure.
There was a template that still exists in the US, which is bring in a CEO at Series B.
Okay.
Let the tech co-founders build the business. Once you till the first round of till you raise the first institutional round of capital. When you raise the second institutional round, bring an external CEO. Now, when I entered the VC community, this was almost gospel because this was received wisdom from the US.
From the US, yeah.
And a few VC firms in India tried it, and they fell flat on their faces. Because in India, you try replacing a founder, you'll lose that relationship forever. In fact, you'll not only lose that relationship, you'll lose your reputation in the market because that founder will go and tell 30 other people that don't take funding from this VC because they will replace you when you've started to do well.
Yeah, and not only that, Ritesh, I have seen firsthand actually something which plays out, which is even more, I would say, intense, where the founder actually fights the VC when they're trying to do this, right? And that actually, in a couple of cases, has ruined some companies that were well positioned to scale.
Yeah, absolutely. So it is not for me to form a judgment on whether that is right or wrong. My only point is that is different from how it works in the US. In India, we have all learned that you cannot and should not count on an external CEO at any point in the company's journey. I mean, I think even Flipkart got an external CEO
much later.
Probably
much later.
10 years after they got their first round of funding.
And he had done multiple stints within Flipkart in playing many different roles, right? Before he eventually became the CEO. Then finance, the supply side, many different roles he had played. So in many ways, he was kind of an insider outsider, even there.
Yeah, absolutely. So my point is that the playbook is being invented as we speak. There is no playbook that exists. And I would say there's a last point I would like to mention. That the dynamics of the founder VC relationship are very different in India than they are in the US.
Tell me more.
Part of it is just a reflection of our society. Our society is more hierarchical, and which is why the expectations from the relationship are, I would say, very different. There is in the US, the founder VC relationship is far more equal than I have seen in India, and that gives rise to a little bit of what I would call a paternalistic dynamic between founders and VCs in India. That is, again, can't say whether that is good or bad, but that is the reality and how it is different in India. And this is from both sides. I mean, the founder expects sometimes to be told what to do, and the VC sometimes expects to be able to tell the founder what to do, and that creates a completely new set of situations that I would say people who have followed the US VC model might not be able to adapt to so quickly.
So I think phenomenal points, Ritesh. I think one of the things for me that is a real takeaway from this, this particular part of our discussion, is that this is possibly an unfair question that I have asked, right? Because to be fair, we are still at the beginning of the first innings of VC in India, right? VC in India, really, I would say the first bunch is the Helions, the Accels, the Kalaris, Missikoyas of the world. They are still probably maybe 10 to 15 years old, right? So we're talking about after the year 2000, 2005, 6, that vintage, right? Whereas in the US, right, obviously this whole thing started with folks moving out of, can't remember the name of the semiconductor firm, right, where they all moved out, they formed Kleiner Perkins, Intel, all of that. And so they have probably 40 years head start. So I think point very well made, that the playbook, not only for startups in India is being written right now, the playbook for Indian VC is also being written right now. I think that's going to be one of my big takeaways, tweetable takeaways, for lack of a better word. So point very well made. Now, in the interest of time, Ritesh, quickly, I want to move on after this to wrapping up. And then, guys, now is the time to raise your hand to ask questions. I think hand raising, it should be open to everybody. So, please raise your hands. If not, somebody find a way to tell me. I think hand raising is open. So just raise your hands if you have a point to make. Ask Ritesh a question, ask me a question. Ritesh, just looking forward, right? Let's say the next 10 years. 2 questions here, right? And let me ask you the first question first. While the playbook is being written in India, and while, let's say, the VC India playbook is being written, what is being unwritten globally is the VC playbook itself globally is being rewritten, right? There is so much of disruption in VC. There is AngelList, there is Republic, there is, Gumroad recently raised money through people raising money on credit cards. I got a deal yesterday where there is a woman founder, actually very interesting, building a cosmetics firm, who has put up on a website saying, hey, contribute to our fundraise. There was always Kickstarter. The VC model also in many ways is getting upended, right? So where do you see the primary areas of disruption in the VC space itself, number one? And part 2 of that question, Champ, is are we seeing the emergence of a very different VC playbook globally?
So, Ryan, I don't necessarily have a good answer to this question.
Okay.
Because we hear a lot about innovations in the funding market, in the VC market. And yet, at least in India, when you try to raise even $1 million, you have 15 names to go after. Maybe 20. But a lot of the innovation is happening at the very, very, very small end of the spectrum. And I'm hoping that some of it scales. I'm hoping that mainstream VCs adopt some of those models as well. And I'm looking forward to adopting that. I mean, we have been thinking, not just thinking, actually actively trying for 5 years to think about how we can automate filtering of our deal flow. And I have not found a good answer to the question in this specific instance because the data quality is not very robust. So you can really only make good decisions if you have good data. Otherwise, you still have to rely on a more manual decision-making process. But I would say that I'm not yet entirely convinced that in India, the VC model is being disrupted today. I mean, if the
Fair
moment
enough.
we start seeing the evidence of that, I would love to be the first to put a stake in the ground for a new model that works. But I'm not seeing enough evidence today of that disruption happening.
So, Ritesh, I will tell you from personal experience where I am seeing significant disruption. And you are right, it is happening at the much more at the early stage. If I just look at my own experience, right, given the fact that we have scaled and I've scaled this and my previous experience, a lot of founders reach out, which is actually the thesis for starting the Good Time Show. A lot of founders used to reach out to me for advice, right? And of late, that has actually turned. And people have started coming to me saying, hey, having heard your advice, can you help us raising a syndicate? And so I have actually now decided to start a syndicate on AngelList, right? We call it Qua Capital. Abhishek Nag, who is an active angel investor, and we both run this. So if anybody is looking to raise early stage, please let us know. But there I'm seeing a lot of change, Ritesh, where people would struggle to get funds for the early stage. Now there is some sort of very early stage syndicate. That was funny ringtone. Very early stage changes happening in terms of some sort of syndicates forming. Now that is one change that I'm seeing. The other thing is, if you look at it, maybe not in India, globally there is some change right around this. Around if you look at folks like social capital in particular, right? So maybe are you seeing this change play out at a very early stage? And what you're saying is that it's just at the very early stage and not really at the institutional VC level. You're not seeing any change at that level.
Actually, the challenges are more structural, Ryan.
Okay.
In my experience, the
Just
challenges
explain.
that there is not a deep enough pool of capital available domestically. So let's see how the syndicate model scales up. Right, the syndicate model can really only scale up if either the same people have a lot more capital to deploy,
right,
or you can create very large syndicates and in a way organize them in an automated fashion. The challenge is that, structural challenges aside, the challenges of what vehicle do you use and what the legal challenges aside,
right,
I would say that the biggest issue with many of these innovations is the lack of a deep domestic market for capital. We raise capital both domestically and internationally,
right.
and there are hardly any institutions in India that actually want to invest in this asset class. So that leaves individuals. You can invest in a VC fund today by putting 20 lakhs a year, and even that market taps out very quickly. That's a tiny amount. Even that market taps out relatively quickly. So I do think that kind of, so today I don't think it is possible to raise a large amount of capital in India, whether as a syndicate, whether as a VC, using just domestic individuals alone. You started a syndicate. How many syndicates in India are able to raise $1 million in an angel round for a startup?
None. I don't think anybody at the moment, Ritesh.
And that is my challenge. That is not an innovation problem. That is an availability of capital problem.
Interesting.
Now, within the VC construct, within an institutional construct, will there be disruption? Absolutely. But I am not yet seeing. I'm seeing significant barriers to scale of a non-VC construct starting to compete with VC.
So let me ask you an interesting question there, Ritesh. This is something that has bothered me quite a bit, right? Why do you think, and your points are very well made, well taken. Why do you think that a YC equivalent coming out of India, and there are multiple people trying this, VC as a platform kind of stuff. I think Bloom has probably is one of the guys who, Karthik and Sanjay, they talk a lot about this. This is, very important part of their go-to-market. They just had, I beg your pardon, the Bloom X Day, and they're doing some very interesting stuff, right? But not at a VC level. Independent of a, let's say, traditional VC, I'm curious, why do you think that no YC or YC equivalent or Indian version of a YC has come about. And is there space for something like that? Maybe that's part two to the question.
I do think there is space, and I see no structural barriers to a YC like platform coming up in India. So I do think that is not only possible but probable in the next few years. That a YC like platform will emerge in India, and I think most VCs in the country would support a platform like that.
Okay, we should talk more about this then separately. But go ahead.
Great, sir. I don't have anything more to add on this. I agree with you that platform is not only possible but very likely.
Okay, great. So something for us to chat about in a bit more detail. So last couple of questions, Ritesh, and then we've got Deeksha and Hansi up here. So let's say we are in the year 2030 now, right? Or maybe 2031. Obviously, COVID's passed. We are maybe on like stage 3 or 4 of the Indian ecosystem. The thing about exponential growth is you can never tell. Now, looking back from 2030, where would we be at 2030? What would what do you think are going to be the big changes or the big things that would have happened between now and 2030 in the Indian startup ecosystem? And by that, I mean companies, VCs, enablers, you name it. What does 2030 look like for the Indian startup space?
Yeah, it's a question that probably merits a clubhouse room of its own.
You're more than welcome to come back and we'll do another one. But what's your short take on this?
My short take is that we are not going to play catch up with either US or China. The way this will evolve in India is likely to take a completely different trajectory.
Okay.
There are some trajectories that I fear, and while that might have a lower probability, but I really that's what keeps me up at night. That if the tech world in India becomes an oligopoly, that is my worst nightmare. And at least at some point last year, it started to feel like a potential reality with with Jio going and raising $25 billion in the space of 6 months and starting to buy companies left, right, and center. And the other reason I fear that future is because our government actually plays too large a part in our ecosystem. And I do worry about that could lead to an oligopolistic structure in the startup industry in India.
And sorry, just if I push you on that, Ritesh, who do you think the two big players are going to be in? Maybe and oligopolistic could be in every vertical. There could be two people, and there could be two people who are just fundamentally, the two players in the oligopoly. Who do you think the 2 or 3 or the top few players would be in that construct?
Actually, I don't necessarily mean 2 or 3 players, and I don't really have a point of view on whether it will be 2 or 3 players per industry or 2 or 3 players that dominate the internet overall. But what I do worry about is that through a combination of capital and regulation, the incumbents close the door on new companies. And I worry, for example, about the forthcoming e-commerce regulation. I worry about the kind of capital a few players have raised, and these, India need not necessarily go in the direction of China. It could also be a combination of domestic and large international players. That now we have the Jio and the Amazon and the Google,
right?
And now that's it. These companies become the dominant internet players in India, and I have always believed that is not the Indian way. But in the last, it's still a very, very low probability, but I have started to worry about it over the past couple of years. A more likely scenario is where as you know, in India, in technology, change happens slowly and then all of a sudden. So I am actually uh, my sort of the biggest inflection that I'm expecting in the next, I would say, even 5 years, is that today the internet consumption in India looks very, very different from the internet consumption for the rest of the world.
Right.
We don't pay, we consume a lot for cheap, monetization is poor, and so on and so forth. And my expectation is that sometime in the next, in this current decade, uh, all of a sudden the consumption habits of Indian consumers move closer to that of their global counterparts, and that would be and that gets driven by a combination of factors. I think one is just higher purchasing power over time, but the recognition that much of that consumption that is and will continue to happen uh, happens online. That is likely an inflection point and not a gradual change. And that's one thing that I'm holding out for as well. And at that point, you have the Cambrian explosion in a way of startup activity, of entrepreneurial activity in India. And my bet is that is likely to happen in that sometime during this current decade.
Interesting. And where is Stellaris going to be 10 years down the line?
Well, Stellaris will hopefully be in that list that I spoke to you about.
Okay,
the,
nice.
the top three or top five, not by AUM and not by returns, but in the top three or top five of the consideration set of entrepreneurs in India. That when they want to raise money, hopefully ours is the first name on the list.
Awesome. Now let me ask you the last question, Ritesh, before I hand it over to Diksha and Hansi to ask their questions. And this is a tricky question, right? But I like to end many of my rooms with this question. You're at a very advantageous point, right? You see 80% of the deals that are going through the system, like you mentioned. You guys have a very pedigreed background before this. You're talking to a lot of founders. You also, like you said, went on the streets and did some, did UI testing, a whole bunch of interesting things. But overall, you're also talking to folks who are globally thinking about putting money in India. My last question to you is this: what are your earned secrets? Given who you are and what you do, what do you now know, which I don't know, or which everybody else here doesn't know? Any top 2 insights that you've gleaned? I would love to have you share that.
Actually, Ryan, with your permission, I would like to defer this. Question to the next session. I do want to, because unfortunately I have a 9 o'clock. And,
let's do it. Let's do it.
I do want to take at least a few questions before we.
Done. Let's get Diksha. Diksha is a friend. Diksha runs Incubate. She's doing some very interesting work around diversity and inclusion, and she's also thinking about how do you bring in capital that is more diverse. Diksha, go for it. Ask your question.
Hi Ryan, hi Ritesh. I know we're short on time, so I'm gonna quickly jump on the question. Ritesh, what would your advice be to people who are looking to build the next wave of VC or money being invested into startups, right? What would you have known when you started Stellaris that you wish you had known, and which is something that maybe you can pass on to people who want to disrupt this entire space?
So Diksha, I think the only way to learn how to make investments is to actually make investments, and I would encourage sort of 2 different paths. Either join a VC firm, cut your teeth at investments, at another VC firm. That way it's that way it's the you don't necessarily have the have the responsibility for the entire portfolio, but the few companies that you invest in, it gives you a platform, it gives you capital to go and deploy. The other way is what Ryan is doing, which is to start angel investing, ideally along with a syndicate. But it's not only enough to to invest, I would say it is very important to document why you are investing, what could go wrong, and then go back to it periodically and see what you are right about and what you are wrong about. Because outcomes in this industry are so um, uh, uh, so driven by luck that just outcomes don't give you enough learnings. Uh, you know, I can't say that I made good decisions in the companies that have worked out and I made poor decisions in the companies that did not work out. But only if I document how I'm thinking at the time of the investment, am I able to go back and see what I was right about, what I was not right about, and hopefully become a better investor in the process. So, I mean, there's a lot more, but broadly, either join a VC firm or start your own angel syndicate. Take other people's money in whichever form possible, because that brings discipline, that brings that brings risk management. If you're only playing with your own money, you can take more risk than you do with other people's money.
Awesome, Ritesh. I think that's a fabulous piece of advice. I think when we started our own syndicate, we've also realized you have to write investment notes, much more thesis explanation. So great point. Hansi, last question to you. We have like 2-3 minutes. What is your question to Ritesh, Hansi?
Okay. Hi, Ryan. Hi, Ritesh. Ritesh, I brought Mercer to India in 2008. So I really understand institutional money. And your point was that there isn't enough of that in India. But institutional money in the end is still retail money. And I'm not sure I agree with your comment about not enough individuals having money. There's enough HNIs in India that could. My question to you is, think about why those individuals are not investing in VC. And I put it to you that there's not enough research being done on VC. And 10 years ago, 2008, I came to VCs, say, can I research you? They said, no, thank you. 5 years ago, I came to research you. They said, no, thank you. I'm just saying that if you don't let people in to actually research and give that research out to the gatekeeper market, which is private banks and private wealth firms, then HNIs don't have any basis to invest. So they put it in the too hard basket. So I'm just saying, I don't know if you agree with it or not, but certainly I would love your thoughts on why HNIs don't invest enough money into VC.
Hansi, you're absolutely right that while there might be enough money, there isn't enough familiarity with this asset class. There isn't enough trust in this asset class. I told this story in one of the webinars I did a couple of months ago. I once walked into a large HNI's office out in Calcutta, and I was wearing a suit to try and impress this large industrialist. And he let me speak for 10 minutes to introduce the fund, and then he asked a very basic question: how do I know that you'll not run away with my money? And that's when I realized that his anxiety was not about returns. His anxiety was about being able to trust a VC firm. And I have never been asked that question before, or I had never been asked that question before. I have been asked that a few times afterwards. But to come back to your point, Hansi, it is as much a lack of a trusted intermediary as faith in the asset class. Pension funds in India are not allowed to invest in venture capital as a class. Insurance companies have to jump through multiple hoops. Banks can technically take that exposure, but at least for whichever reason, haven't actually taken that exposure. So, and that concept of fund of funds that exists in other geographies actually does not exist in India. So, to me, it is unlikely that individual HNIs will actually be able to get enough information and develop that feel for this asset class at a large scale to be able to solve this issue. In my mind, it will have to be solved by an intermediary that collects capital from such HNIs and then funnels it into the right VC funds or PE funds. That to me is the only scalable solution to this problem.
Awesome, Ritesh. Thank you for your time. Thank you for being here. For me, fabulous discussion, amazing points that you brought up. I think the highlight of today's discussion, Ritesh, in many ways was where you started off saying this is really the new wave. We are seeing a very interesting wave, India for India in many ways, creating unique models like we've seen across the board. But to me, the line of today's discussion was your point on the Indian VC playbook is just being written. Thank you so much, Ritesh. Thank you guys for being here. Next Wednesday, same time, please follow the club, follow Ritesh, follow me to learn what's up. And until then, let the good times roll. Have a great week. Stay safe. Ritesh, thank you so much. Absolute pleasure having you here.
Thank you, Ryan. Thank you, everyone. Look forward to interacting with all of you.
Cheers, guys. Good night. Thank you so much.